Hey everybody, it's Brian Shannon from Alphatrends.net. Today is Friday, the 3rd of February, 2023. If you're watching this on YouTube, please give it a like, subscribe on all that good stuff. The markets had a good week. We pulled back a little bit here today. With the exception of oil and oil stocks, the markets were quite positive. The S&P gained close to 3%, NASDAQ 5.5%, led by the semiconductors as they often do. Year to date, 22.6% for those semis. So it's easy to feel like you're missing out in this market. Just don't forget, we have 11, 10 and three quarters months left in the year. I was on Fox with Charles Payne on Thursday. And on that, first of all, thank you, Charles, for featuring my book there. The book is out, Maximum Trading Gains with the Anchored Volume Weighted Average Price. And unfortunately, Amazon has had a difficult time keeping it in stock. It is currently out of stock, but that should change here in the next couple days. So keep refreshing. It did make it all the way up to number 446 in all books and number one in investment analysis and strategy. Also, keep an eye on Twitter. I will keep you updated about the ebook. But on Fox, I had spoken about I was on right at this point right here, and I said to Charles, right here, right now, the Nasdaq, the NDX, that's what they like to look at, is at two important levels. One, the anchored volume weighted average price off of the all-time high. That's that red anchored VWAP, and then the 38.2% retracement of the all-time high to the low last year. That's that 38.2% right in there. And I said that, basically this is where I'm expecting to see some supply come in. I'm not expecting it to change the trend, but we've gotten extended here. The Nasdaq, from the lows up close to 20%. So for this market to, to think that maybe a pullback is in order is certainly reasonable. We had a little bit of profit taking here today. Let's just switch it back over to what I normally look at, which is the Nasdaq, and you can see here's the anchored volume weighted average price. That is the Nasdaq 100 because it's an ETF you can trade. This is the anchored VWAP from the Federal Reserve. This is the rising 5-day moving average. So we're still above the rising 5-day moving average. We just ran into a little bit of supply here at the anchored VWAP from the high of last year and the COVID VWAP. So that's the Nasdaq. For the S&P 500, we've rallied here pretty good beyond this band of resistance. It's extended. I think I'd really like to see it pull back, maybe even all the way down in the next coming weeks. That maybe it could correct, price wise and through time down to the year to date anchored volume weighted average price. We've gotten that far ahead of ourselves. This type of rally cannot sustain itself throughout the rest of the year, obviously. But it's off to a great start, and just don't giving into your FOMO and chasing things higher, because that's how you can get yourself into a lot of trouble in a bullish environment, is to be one of the last people in, and then it starts to pull back, and you start puking them out down at those lows where the institutions begin to accumulate again. Wait, don't buy the pullback. You've got plenty of time. You always have time to buy in the pullbacks. Sometimes you miss an opportunity, but that's better than missed money. So if you look at this, maybe some further pullback in the next week, week and a half to even 405, 400. That would be very healthy for the S&P 500. When we look at the weekly chart, that's actually a daily time frame. When we look at the weekly chart, we do still have a declining 40-week or 200-day moving average. In the next 2 weeks, that will flatten out. I still think that it's likely that we see a little bit more action like this and some shakeouts before a real bull market can emerge, but it's showing certain definite good signs that the buyers are gaining control. And really, when you think about the way that markets move, people are used to looking at that market structure poster that I made and always put out there. This is an abbreviated version of it. And what this shows simply is the four stages: the accumulation before a markup. And the markup is obviously the powerful bull market. Now, maybe we're somewhere here in the market. Maybe we're in stage 1, 3, maybe we're in 2, 1. A lot of people look to identify the exact precise moment and think that that's exactly when you buy. Just because we might be in a stage 2 bull market doesn't mean it's time to buy. It might be extended to get there. So, a lot of people are too focused, I think, on what stage are we in, rather than realizing it's similar to the weather, and the seasons, and the seasons take time to change. Winter turns into spring, spring turns into fall, which turns to winter again. I guess that first one was fall, spring, or whatever, summer. Summer, spring, fall, and winter. You get the point. But it's similar to seasons the way it changes. It's not all at once. One day you're going to look up and you're going to see, hey, you know what? Here, this is the point. We made a higher high on the S&P 500. This is the most recent relevant higher low on the weekly time frame. Technically, we have a pattern of higher highs and higher lows. That does not mean it makes sense to buy right here. You have to ask yourself, how did it get there? Well, it rallied 15% or whatever it is to get there. So now what we want to do is we want to monitor this and say, okay, now we have the higher high, we have the higher low. So let's look for this to happen, not buy the dip, but buy right here. And then the next time it breaks out and it's extended, well, then you sell partial to the people who chase the breakouts. And that's the proper way to look at the markets and the way that the seasons change through the markets. The Russell 2000 continues to behave very well. Let's take a look at the weekly chart there. So this is kind of what I've drawn in previously. Same type of scenario. We've had a big run. We're up beyond the anchored volume weighted average price from the all-time high. That should actually be anchored there. But you can see that anchored VWAP held as resistance, resistance, resistance. And, I go into the book about why that is the case. This is how institutions base their longer term trades. The VWAP, the anchored VWAP, are not just tools for day trading. A lot of people still seem to be confused by that. This is why I wrote a book about it. Again, it's on Amazon.com. It's called Maximum Trading Gains with the Anchored Volume Weighted Average Price by me, Brian Shannon. The semiconductors, same story. I'd like to see this. I'd like to see it continue to rally here a little bit, perhaps pull back, and then see that this anchored volume weighted average price off the all-time highs, which had been resistance, turns to support. Now, it doesn't mean it has to be perfect in that area, but if it were to occur like this, well, the year-to-date anchored VWAP would come up like this and perhaps meet that. Now, maybe it pulls back briefly below it just to shake people out, but this is where the next low risk, high probability setup would occur. Not necessarily at 249 where it is now, but maybe it pulls back down to here and then does this. And this would be the high probability place to purchase. You don't want to chase those breakouts. You want to be involved as the momentum turns back higher on the shorter term timeframes. That's what my first book was about, multiple time frame analysis. That's the whole, between those two books, that's exactly what I do in the market every single day. Now, the biotechs, as you know, we've been looking at the XBI. The XBI has behaved a lot better than the IBB, and this market continues to behave well. I actually got stopped out of my position in here today. I had raised my final piece up to this level, and I didn't get stopped out on the open because I never set my stop before the first 5 minutes. Instead, I sold over in this area and then got out of the rest at the end of the day. But the daily chart and the weekly chart still look bullish. So why would I sell it? Because I'm a trader, not an investor. Know your time frame. Just because one time frame works for me doesn't mean that's what you should do. And I'm not here to argue with anyone about what's the right thing to do. It's about what's the right thing for you to do. Here's the anchored volume weighted average price off the all-time high. The last time we touched it was right here. So this is where we do a handoff. A handoff is one of the strategies in the book. So you can see that the buyers are back in control from there. That's also where we see the year-to-date anchored volume weighted average price. We also see down here when we zoom in that we have a rising 10-week right here. This is the black one, 20-week, 30-week, and 40-week moving average. This market is in an uptrend. It doesn't mean it has to break this to confirm the strength. Over here is where it was confirmed. Now what we want to do is observe it for the time frame you're involved in and decide whether or not it makes sense to purchase. As I mentioned, I'm in cash in regards to this. I'm a trader. That's what I do. I'm not here to tell anyone that's what they should do. I always encourage you, make the trade your own, but use the same principles that make sense, that are based on what institutions are doing in the market and how they drive these trends, and learn how to anticipate and watch those trends develop. That's how you obtain success in the market. Stocks this week, I mean, you had, let's see, Meta came up I haven't purchased this stock because the 200 day moving average is declining, and I have zero regret for not owning it. But here's the anchored VWAP off the all-time high. I think you've got to be very careful about owning the stock in here. It's certainly extended. I think it's likely to begin some deeper consolidation in that one. Tesla continues to behave well. Here's the anchored VWAP off the all-time high. Here's the anchored VWAP off that and this high. So, maybe it's still got some room to the upside, but that's a heck of a rally here. And, when you talk about, the winners, you could talk about ARK and how well ARK has done this year. Is ARK really have they really done a good job? You could say since the beginning of the year they have, but the average price that this fund has traded at since inception, the volume weighted average price, is right up here at $68 per share. So that means the average participant in the ARK funds is down 35%. And billions of dollars have been lost in this. This is a bounce within a downtrend. It's a dog. Don't fall for, bullish comments from the fund manager. Just look at it realistically and say, is this clever marketing, or is this good performance? Is there risk management in here? As we always talk about, big money does not mean smart money. Again, please subscribe to the channel, give it a like, share it with your friends. Have a good weekend.